Hello guys, welcome back to ESENtaxa. Andrea Papito here. In this specific video we are going to discuss about how you can cash out your capital gains when you want to sell your company shares in Europe tax-free, which is the correct strategy, which is the correct tax planning for you if you have this kind of objective, if this is what you're looking for. Okay, I just want to remind you quickly that ESENtaxa helps people to move in a specific country helps Taxwise to understand if the relocation makes sense or not. So basically we help people to optimize their taxes. We've found a way to reduce your tax burden as much as possible, completely legal, if you want to relocate in one of the European countries. So we help you with tax strategies, especially if you want to bring with you your family business, your family, your business structure, whatever situation you have behind you, we can simulate your situation if you relocate in that specific new jurisdiction. In the description below the video you have our email contact info@esentaxa.com or our Calendly link to book a consultation, 1 hour, 2 hours call, or directly a tax simulation that can help you to understand with numbers if the relocation makes sense in a specific country, because of course you want to see which is the amount of money that you have to pay changing the jurisdiction, okay? Because, you know, a lot of people out there are looking for a better place to live, but also a place that is not too much is not too expensive, and also in terms of taxes, not just in terms of cost of living. Back to the topics of this video. The holding company is the best way in Europe to hold your operative business in one of the 27 European jurisdictions. So far, so good. So far, we know this information. We have made some video in the previously in this channel in which we explain correctly the best structure to have an operative company in Europe and a holding company at the top of it, and exploit this structure to withdraw your dividend tax-free, exploiting the PEX system, or also known as parent and subsidiary tax regime. Now, in this video instead, we are going to discuss about how can I cash out my capital gains tax-free. So which is the best strategy in Europe to basically sell my business. At a certain point my business reach a point that I cannot hold managing anymore for any reasons. I don't have time to do it, or I reach my goal, I reach my target, I made my business grew so much that now it's the time to sell to somebody else. Or just I receive an offer, somebody that basically is interested in my business, wants to purchase the business, the entire structure the way it is, and I just want to sell it and realize a capital gain. But how much taxes I have to pay if this business is located in Europe, if I realize these capital gains in one of the European jurisdictions? Okay, so first of all, let's imagine the first scenario. The first scenario is that we start from scratch. You come with us, you come to ESENtaxa, and we decide together which is the structure to planify this kind of target, this kind of objective. So you say, I'm going to build this business. I know that from now up to 5 years or 10 years, my business will grow a lot and I have to cash out. So which is the best place to establish my business? So if you start from scratch, we can definitely suggest you Estonia. Why? Because Estonia doesn't tax you on the corporate level, and if your target is just makes your business grow and not living out of your dividend on yearly basis, you don't want to make the profit, withdraw the dividends after making the profit, make no sense to choose a jurisdiction that basically tax you your corporate tax. All the rest of the jurisdictions in Europe, also all around the world, they always tax the profit with a corporate tax at 20%, 50%, 30%. So you have to pay this tax anyway. And then on the net profit, you can keep it in the company or withdraw it through the dividend and pay also the dividend tax at your individual level. So the best jurisdiction to avoid this kind of things is basically Estonia. Estonia doesn't tax your profit if and only if you keep the profit in the company. So you don't ask for any dividends, you keep your profit in the Estonian company, zero tax, as long as the business is running in this way. So you use the money in the company to reinvest, to make your business grow. So it's a perfect jurisdiction for that. At a certain point you want to cash out. You say, I've made my business grow after some years and I want to sell to somebody else. Good. I'm gonna do that. So if I'm living outside Estonia, so if I'm just using Estonia as a jurisdiction to run my business in the European Union, perfectly fine. The capital gains that I'm going to realize if I sell my share on the Estonian company are not taxed in Estonia, generally, unless some conventions says the contrary, but in general cases Estonia doesn't tax anything, and you have to tax your capital gains in the country in which you are residing, which you are fiscal resident as individual. If you're living in a country that doesn't tax your capital gains, bingo, you're already done, because you don't pay anything at the corporate level, you don't pay anything when you realize the capital gains selling your shares, zero tax there, zero tax on dividend level, on capital gains level, you're already done. You reach your zero tax status. So that's the first scenario. Then the scenario instead is I'm living in European Union. So basically I have my Estonian company, but somehow I need to cash out my profit, my capital gains, but I'm living in one of the European jurisdiction. So what I have to do? Here you have to move. You have to physically move and change your tax residency in one of the few jurisdictions that allows you to don't pay any taxes on capital gains on company shares. Which is the jurisdiction? It's Belgium. Belgium, basically, if you hold your company shares for more than 6 months, is not considered a speculative operation, so basically it's tax-free. It's not even taxable, it's not imposable. There's not even a box on the tax file return to declare this kind of gains, these capital gains. So your tax residence as an individual in Belgium, and then your company in Estonia, it's basically the one the company that you're going to sell. And this is also a combination that allows you to basically be tax-free, still remaining inside the European Union. What if instead you have already a business, you have already a structure, you didn't come to ESENtaxa, you didn't know about us, and you discover us afterwards, but you have already a structure. So we have to somehow accommodate your situation, improve your situation in order to give you to allow you to pay less tax possible. So if you didn't choose Estonia as a jurisdiction since the beginning, you might have chosen another jurisdiction, and there of course you have to pay the corporate tax on that jurisdiction. I believe you have probably opened a business in France, opened a business in Germany, Italy, Spain, whatever other countries. There is not much we can do there because you have the corporate tax there, especially if you have a physical business in that specific country, you have the business there. We have to pay the corporate tax in that jurisdiction. But we can at least operate on the capital gains level tax, which means that in the same scenario as the Estonian company, I want to sell my business or my businesses. What I have to do is pretty simple. You have to hold all your business with a holding company in Europe that allows you then to realize your capital gains tax-free. And here again, we suggest you, again, Belgium. So Belgium can have your European, we call it like European holding company, which is basically under the Belgian jurisdiction, which is basically holds all your business around Europe, all your operative companies. The operating companies can also send dividends towards Belgium tax-free. So it means that since all the other European jurisdictions anyway, they oblige you to pay some taxes, at that point you can also the net profit, the profit that remains after being taxed at the corporate level can flow to the Belgium company tax-free. At least we have these things with the dividend, with the tax system, with the subsidiary parent company. And this is already a good result. And then once you have the holding company inside the Belgian jurisdictions, even if you are resident or non-resident in Belgium, still you don't pay any taxes on capital gains. If you sell the entire holding, which holds all your structure beneath, everything will be tax-free. Okay? It's extremely important to do that. Either you move yourself in Belgium, but then we have to check if in Belgium you have to pay some other taxes on other type of incomes, on worldwide income, because Belgium taxes people on worldwide income. So if you want to move to Belgium just to sell your holding company shares tax-free, we have to also see what's the impact on the other type of incomes. Instead, if you're living outside Europe and you're looking for another jurisdiction, we can check with you which is the best jurisdiction outside the European Union that have a nice tax agreement with Belgium in order to still see your capital gains tax-free in the country you're living. Okay, because then if Belgium doesn't tax your capital gains, we have to see which is the jurisdiction outside the European Union which basically allows you to pay zero taxes when you realize capital gains from abroad. If you want to know more, subscribe the channel, click like button and notification bell to be always updated whenever we release this kind of content. And don't forget that in the description below the video you can be in contact with us with our email contact info@esentaxa.com and a calendar link to book straight a consultation with us. Thanks for watching this video. See you the next time. Bye.